Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, August 6th, 2025, our spotlight is firmly fixed on Tesla, ticker Tesla, which continues to dominate headlines and challenge investor expectations. Let's start by looking at the broader market picture on the one-day chart, encompassing recent months of trading activity. Recent news has certainly added layers of complexity to Tesla's narrative, directly impacting its stock performance. Just hours ago, reports surfaced that Tesla is under fire for overpromising and underdelivering, a sentiment echoed by top investors. Adding to the pressure, only 55 minutes ago, news broke that Tesla is being sued over self-driving claims, a direct fallout from its Robotaxi launch. This legal challenge comes amidst the backdrop of mixed signals, like the recent $29 billion stock grant to Elon Musk, intended to keep his energies focused on the company. Looking at our one-day chart, we can clearly see the significant volatility that has plagued Tesla throughout 2024 and into 2025. From early March 2024, when the stock was trading around the $160 to $170 range, we witnessed a substantial rally, peaking significantly towards the end of last year. The CNBC data confirms a 52-week high of $488.54 on December 18, 2024, a peak largely driven by enthusiasm and growth projections. However, since that December high, Tesla has been on a noticeable downtrend, characterized by sharp pullbacks. Major support in late 2024 emerged around the $240 to $250 level, where the price found temporary footing. Fast forward to early 2025, we saw a notable dip to the $222 range in March, followed by a bounce back. This consistent pattern of sharp drops and attempted recoveries highlights the stock's sensitivity to both internal news and broader market sentiment regarding EV competition. The current price is around $308.72, which was yesterday's close according to CNBC, but today's trading has already seen a low of $306.93. Let's switch to the one-hour chart to observe the more immediate price action over the last few weeks. We can see that this time frame reveals several short-term trends and reversals, offering crucial insights into intraday dynamics. Notice the significant swings in mid-July, moving from lows around $290 to highs above $330 within days, showcasing the stock's inherent volatility. The average volume on this chart suggests considerable trading activity, particularly during periods of sharp price movement. Now, let's zoom in even further to the 15-minute chart, focusing specifically on yesterday's action, August 5, 2025. The news stated that Tesla stock fell as low as $305.50 yesterday before regaining some ground. If we pinpoint the candle around 13:28 Universal Time coordinated on August 5th, we clearly see that low of $305.50 being hit. This rapid intraday sell-off, likely fueled by the news of the self-driving lawsuit, underscores how quickly negative sentiment can translate into price depreciation. However, the quick recovery from this low suggests that buying interest remains present at key support levels, indicating a battle between bulls and bears. Returning to our one-day chart, let's delineate the critical price levels. Immediate support for Tesla currently sits around the $300 to $305 zone, a level tested recently as per today's news and yesterday's low. A breach below this could see the stock retesting the mid-$280s, which acted as significant support in June and July 2025. On the upside, immediate resistance is visible around $315 to $320, where price has struggled to hold in recent days. Breaking past this would open the path towards the $330 to $340 range, which served as strong resistance and former support in late May and early June. Long-term, the major resistance stands near the $350 to $360 level, a point from which previous rallies have often reversed. Considering the fundamental factors, the bearish arguments for Tesla are compelling in the short term. The overpromising and underdelivering narrative, combined with legal challenges surrounding crucial technologies like Robotaxi, creates significant downside risk. The debunked Warren Buffett rumor highlights intense competition in the EV market, suggesting that Tesla's moat may not be as wide as some perceive. Furthermore, high trading volumes during sell-offs indicate strong conviction from bearish traders. However, there are strong bullish counterarguments, particularly for the long term. Elon Musk's massive stock grant demonstrates a continued commitment from leadership, aiming to align his interests with shareholders. Cathie Wood's bullish stance, viewing Tesla as the world's largest AI project primarily through its Robotaxi potential, suggests a transformational future beyond just car manufacturing. The stock's historical ability to bounce back from significant pullbacks also showcases its resilience and strong underlying retail investor support. If Tesla can demonstrate tangible progress on its autonomous driving claims and alleviate legal concerns, sentiment could quickly shift. In recap, key price levels to watch are immediate support at $300 to $305 and resistance at $315 to $320. A decisive break above $320, especially on strong volume, could signal a short-term bullish reversal, with a 60% likelihood if accompanied by positive Robotaxi news. Conversely, a sustained break below $300 would likely target the $280 to $290 support, with a 70% likelihood given current news flow. Traders should monitor news specifically related to the self-driving lawsuit and any updates on Tesla's AI and Robotaxi development. Volume spikes during breakdowns or breakthroughs will also be crucial indicators of strong directional conviction. Always remember to conduct your own independent research and tailor your investment decisions to your personal risk tolerance and financial goals.